Okay, we've got a few more folks coming on. It's 10:01, so we're going to go ahead and get started. So good morning, I'm Angie Hubbard. I'm the Director of Economic and Community Development with the Greater Nashville Regional Council, and we're excited today to introduce you to a new program that we have to assist small businesses that have been impacted by the pandemic. And joining me today from our small business lending team is Rhonda Smith. And we're going to run through an overview of the program's application criteria to introduce you to the program, and then hopefully we'll start seeing some applications come in. We have today is the kickoff day, and I hope everyone had a great Thanksgiving. A couple of things before we get started. Let me get over to advance the slides. We are using a Microsoft Teams platform. If you haven't used Teams before, there are a couple of features we would like for you to use. If you have a question anytime during the presentation, please use the chat feature. It is along the top row of icons. It looks like a post-it note or a conversation bubble, and you can type your question there. As you can see on the slide, we will have a question and answer session at the end of the presentation. We've timed it to conclude our presentation to allow some time for questions. We do intend to honor our 1 hour request of your time today, so we will be concluding by 11 a.m. If you've called in instead of participated by phone, if you're calling in from a phone number that is different than what you have used to register, if you'll please follow up with an email to let us know. We want to make sure that we have all the contact information for all of the participants so that we can follow up with any additional information they have. And I'm going to ask that you mute yourself. I am probably going to put some folks on mute also, just so we don't have background noise. And with that, we're going to get started. So first, about the Greater Nashville Regional Council, and some of you may have heard of us for different things. We do transportation planning. We have an area agency on aging and disability. We're the Economic Development Administration designated development district for the 13-county region, and we also have a small business lending team. We have a portfolio of loan products through the Mid-Area Cumberland Community Development Corporation that we staff. And then as the development district, we also have a couple of loan programs through the Economic Development Administration. But this is our territory. We have the 13 counties, and this map is very important because to be eligible to participate in this program, your business that is going to be assisted must be located in one of these counties. This is a little bit about our small business lending team. Rhonda is the manager of our Economic Development Administration Revolving Loan Funds. We also have, as part of our team, Gwen Schaefer, who manages the SBA 504 and related programs. And they have great relationships with banks and small business owners. And we have loan products, as I mentioned, to finance commercial real estate, equipment, and working capital. And a great thing about working with our small business lending team is our programs have low down payments, we have competitive interest rates, and the loan stays with GNRC for its entire life. So a little bit about this particular program. A lot of you have heard about the CARES Act, the Coronavirus Aid, Relief, and Economic Security Act that passed on March 27th. It has been used to fund a number of programs throughout the country. One of the uses was appropriated to the U.S. Department of Commerce Economic Development Administration to help small businesses recover from the pandemic. We have an existing revolving loan fund at GNRC, and because of that, the EDA awarded us additional funds of $2.49 million to capitalize a separate revolving loan fund, and this is specifically to help small businesses impacted by the pandemic. So as I mentioned, you must have a business that is located in one of our 13 counties. You must be able to provide documentation of how your business has been adversely impacted by the pandemic, and the maximum term for the maximum amount is $250,000. And Rhonda is going to take it from here and walk you through some of the benefits of our loan program and application criteria. Rhonda, you're up.
Great. Good morning, everyone. As she said, I'm going to walk through some of the basics on the actual loans, as well as the application process. We have had several benefits while our RLF loan program already provides low-cost funding. We have been able to extend some of those benefits to include no application or upfront fees. In addition, we have been able to waive interest for the first 24 months. Beginning on month 25, the small business would start being charged interest. During that 24-month period, principal payments will be expected. In addition, normally RLF loans are required to leverage additional capital. Generally, what that means is GNRC will partner with the borrower and a bank will provide a portion of the financing. With this loan program, that is not necessary. It is, however, still acceptable. So if you have a project that is slightly larger in size, or you're already working with a bank and this will allow that loan to get approved under their parameters, that is still allowed, but it's not necessary. In addition, we normally need to have a letter from a bank stating that you can't qualify for credit without the use of one of the government loan programs. And in this case, that instance has been waived. That requirement has been waived as well. And as we mentioned, we'll have a low interest rate, and that will be determined at the time of closing, and there will be no interest for the first 24 months. It will, however, be fixed from month 25 through the maturity of the loan, which can be very as a capital. Slide. Some basic considerations as far as whether or not your business is eligible. As Angie mentioned, the business does need to operate in our 13 county region. It does need to be considered a small business. To make this determination, we are using the SBA standards. There is a table that we provided a link to, but we also consider affiliates. And if you're unsure if you meet this qualification, we make these determinations on a regular basis and would be more than happy to help you with that. I would guess that most of you probably will qualify for that. In addition, the loan program is open to for-profit business entities. We do need to see evidence of the pandemic impact on your business and your planned use of funds. So your business does need to have been in operation as of March 22, 2019. If you are a startup business, we do have other loan programs that we'd be happy to talk to you about, but this one is for businesses that were operating and were impacted by the pandemic. We do need to see evidence that the loss of revenue or if something caused significantly increased COVID-related expenses, that those were due to the COVID-19 pandemic. We are asking that you provide a business plan for how your proposed project will help your business recover from the pandemic moving forward. And GNRC is required. These are economic development programs, and so as a whole, we are required to show that the loans that we make help retain and create jobs in the community. And so we will be asking that. One thing we do see sometimes with small businesses, people forget their own job. So we can help with that as well. There are also some other ways to meet that qualification, but with the size of the loans, most people should be able to meet those qualifications, but don't forget your own job as well if you're a sole proprietor. Next slide. Great, thanks. We've provided some minimum credit considerations for you to see. This isn't inclusive of everything that we will look at as far as making a determination about whether or not we can make the loan, but this is some minimum criteria, and so we want people to have this up front so they can best use their time. We are looking for a minimum credit score of 650. We are asking that there has been no change in the business ownership. And I think that should actually say, it's March 22, should say 2019, but, and debts owed, you can't have past due debts during the last 12 months prior to March 22, 2020. That's the date of the emergency declaration for the pandemic. In addition, if you have judgments or bankruptcy filings, pending litigation, have issues with your federal or state tax filings, that isn't allowed. Same thing with no prior loss to the federal government. If you had a government loan that you defaulted on, that would disqualify you in most instances. There are a few exceptions to that, but in most instances that would be a disqualifier. And we're also looking for a history of business operations that generated cash flow sufficient to meet our debt service coverage, so that you can actually service the debt that you're borrowing. You can go on to the next slide. Well, the program is open to all the small businesses in the area, and we do encourage anyone who's been impacted to contact us or go through the eligibility screening and apply. We do really want to encourage some of the hardest hit industries that are very core to our region, including accommodation and food service businesses, hospitality, travel, tourism, arts, entertainment, as well as minority groups, women-owned businesses, veteran-owned businesses that have really been shown by the data to be especially hard hit by the pandemic. You can go on to the next slide. The use of funds is fairly broad. You may use it, your project can include the acquisition of equipment or machinery. This can be new or used. For owner-occupied commercial real estate, investment real estate is not allowed, but if you need to make some renovations that are related to a change in business plan because of COVID-19, or acquire a building or land or an office condo, that is acceptable. It does need to be owner-occupied commercial real estate, as I said. In addition, working capital is acceptable, as well as training. Training needs to be specific to your business's COVID recovery plan. So if you need training for yourself or for your staff related to something new or different that you're doing as part of the COVID recovery, that is potentially eligible. And then certain professional fees. There are certain professional fees that are not allowed. For instance, attorney or consultant fees related to applying for this loan are not considered acceptable. But if there's something that is more directly project related, such as a title search, if you're acquiring a piece of real estate, that would potentially be acceptable. So you'll just have to, we'll just have to go through those with each of you on a case-by-case basis. Is there somebody have a question?
That's it. It's me, Ron. Before we move on, I wanted to point out that, sorry, I'm echoing. Certain federal requirements apply if you do the acquisition, construction, or site improvement, and you may want to talk with us first if you've got multiple uses. Those requirements can either add time to the before we can close, or increase the cost of the project if you have to implement some wage rate requirements. So don't let it deter you. We just wanted to point that out, that those are some things to be aware of.
Yes. I think the other thing to add here is that we will as part of the application process, and we'll get into this in a couple of slides, but we will be needing documentation of the use of funds. So if you're acquiring a piece of equipment, we will need invoices. If it's used, we may need an appraisal. And similarly for each of the other categories. So we will need the specific use as opposed to just a general dollar amount and general description of how you plan to use the money.
Hey, Rhonda, I noticed there are a few questions in the chat. One of them is someone asked, what is considered working capital?
So working capital would be certain operating expenses of your business. That can include utilities or payroll or other types of expenses for keeping your business operating. It's a pretty broad definition.
Thank you. And there are several questions coming in the chat, and so that we can make sure to get through to the end of the presentation, I'm monitoring the chat also, and we will make sure and go back through and answer your questions. And so Rhonda, let's you ready for the slide on what's not eligible?
Sure. So included in things that are not eligible, I already mentioned investment real estate is not eligible. You cannot use the funds to refinance existing debt that you have, or subsidize interest payments on a current federal loan. We also don't allow duplication of purpose for another federal loan. So if you if you received a PPP loan and you're using those funds for a specific purpose, you can't use this loan for the same purpose. It can be combined for a project if you have a certain type of federal loan and want to add these funds to that. And that would be just a very specific circumstance. You may not use these funds to acquire equity in a private business. Other investments, we mentioned investment real estate, but investment interest-bearing accounts or securities. You may not put this in an account and use it as collateral on another loan. And we also don't allow gambling or other activities that are not allowed under federal law. In addition, you also can't use the funds to relocate jobs from an area that wants to maintain those jobs to our area. As much as we like to have jobs in our area, we aren't allowed to do that with federal money. The funds also can't be used to lobby the federal government, any of the branches as well. We can go on to the next. So required will be application forms, which will be made available. In addition, we will provide a required documents list. It's a fairly extensive list, but it's things most small business owners probably have at hand, including items such as their business and personal tax returns and projections, as well as other documents about the business. We also need to have the business plan showing how the funds will be used to help you recover from the pandemic. So we want to see both an operational and a financial plan for recovery. And we are also going to be asking for projections with assumptions. As I mentioned before, we will need to have detailed use of the funds, and we will be asking for things like invoices to show how those funds are used. And you will need to disclose any other loans that you've received to help you respond to the COVID pandemic. Oh, yes, and I skipped bullet number 1, which is the documentation of how COVID has impacted your business. And so the more thorough you can be on that information, the more helpful it will be. You can go ahead and step forward. So as part of the application process, the first step is a pre-qualification questionnaire, which is available on the GNRC website. You can see the link there. You can go to our website, gnrc.org, recovery loans. It's a short questionnaire that covers some of the basic items that we've discussed here today. And then you can go on to step 2. If you meet the pre-qualifications, we will provide you with an application packet. If you don't, you will be directed to our small business site. It may be that if you don't qualify for this loan program, we may be able to help you with one of our other loan programs. And so it's worth continuing the communication, even if you don't qualify for this loan program. The application packet will be provided. We do need to have you assemble all the documents on the required documents list. Have your plan ready to show how you plan to recover and use the funds for COVID-19 recovery. Complete and sign and date all of the application forms and submit them to the GNRC Small Business Lending Team. It's probably best if you email those to us, but you may also mail them. We have faxing on there. I haven't received a fax in many years, so if you're choosing to fax it, please let us know ahead of time so we can keep an eye out for it, but I would encourage email or mailing. You can, yeah. Based on our other loan programs, some of the common errors that we see as people go through the application process that can either delay the process or cause other issues. One is just remember to sign and date the forms. I know it will feel redundant since it's a fairly long application, but we do need for you to do this. The personal financial statement does need to be completed. And with these federal programs, that does include the business owner's spouse and minor children, especially if they file joint tax returns. For tax returns, please include all of the schedules. When you do your projections, we do ask for the assumptions. If you say your revenue is going to double, we would like to know why you think that and what your basis is for that. We have occasionally seen people fail to disclose their government debt. We also check that, and so we ask that you disclose that. Disclosure doesn't usually hurt, but failure too can. The other thing sometimes that causes a slowdown in the process is failure to disclose affiliate businesses owned either by the business owner themselves or their family members or partners. And in addition, as you're getting to the point of doing appraisals or environmental reports, if they haven't already been done, please communicate with us because there are certain qualifications that we will want to see on those reports, and so it's best to communicate early before you pay for them. And we can provide you with a checklist on those. And you can go on to the next slide. I guess these are my helpful tips, partially for you, partially for us, unfortunately. Please feel free to contact us with any questions that you have. We're happy to answer those, and sometimes it can make the process easier. When you send emails, please put the name of your business in the title of the email. It helps with the volume. We have a relatively small staff going through all of these applications. Similarly, I know that Nashville feels like a small town a lot of times, but please do use both your first and last name when you're leaving messages. It helps us to be able to respond more quickly. And this is just a request on my behalf. When you send in the application forms and documents, if you can send them in a relatively narrow time frame within each other, that will help us keep it all the information together and be able to review it more quickly. And we can go on to the next. Do we have another slide? Oh yes, okay. So once you provide all of your information, our staff, myself and Gwen, will review the application information provided. At that point, we will look at what your project is, what you're requesting, and be able to determine the terms of the loan, as well as any collateral provided. We will be asking for personal guarantees on all of these loans. At that point, we will also do the credit evaluation based on the loan repayment and the project itself. It's not uncommon to have some additional questions about either your businesses or finances during this time, so or we may need some additional documentation. So just to let you know that in advance, it's usually not extensive. But sometimes we just need to get a better understanding of your business operations. We can go on to the next slide. After we've reviewed the loan application and communicated with you about the potential term and collateral, and made a determination of the ability to repay the loan and for the requested amount to meet your project needs, we will then present the loan application to the Mid-Cumberland Area Development Corporation board. MADC is a certified development company that contracts with GNRC to make recommendations on loan approvals for this loan program as well as our other loan programs. The MADC board will vote on whether or not to recommend approving the loan to the GNRC president. That board meets twice per month, just to set some expectations as far as timing. And in the past, they've either declined, approved loans, and occasionally they will approve something, but with some additional requirements. And so we will at that point communicate that with the small business applicant. After that point, we will go into the closing and funding process. You can go to the next loan. Once your loan has been funded, throughout the life of the loan, there are some ongoing requirements that are, one, each of your payments monthly will be automatically debited. That will be set up at the time of funding. And then throughout the life of the loan, we are required to monitor the financial health of your business. And so the loan documents include the following items. We will be needing your tax returns within a few months after the end of your year end. You must maintain adequate insurance to protect our collateral and comply with state law. You must maintain property taxes, must be kept current on anything that you're using as collateral for the loan. In addition, we may occasionally do a site visit of the business. I'd also like to say that for those of you who are able to take advantage of this great loan program, we would love to be able to share your success story about how the project helped your business thrive. We wouldn't do this without your permission, but stories like that do help get the word out to other small businesses in the area. And so if you're willing to do that, we would be grateful for that. And I think we're on to questions, yes?
Thanks so much, Rhonda, for going through that. I'm going to put in my earphones because I am echoing. Now we're at the question and answer session, and first, before we get into there, Rhonda's contact information is available on the slide, rsmith@gnrc.org. Also, here's our, again, website where you can get more information, I believe, and Shannon Llewellyn, one of our communications rock star, is on also to confirm that our qualification form, I think, should be up and running today. Shannon, correct me if I'm wrong. We have fact sheets. Also, we'll be making sure that you guys get a copy of the slideshow, and we are recording this presentation. So with that, we'll move into the question and answer session. We've got a good 25 minutes almost to get through some of these questions that have popped up in the chat. Again, if you do have a question, please type your question in the chat feature and I will read them and toss it to Rhonda to answer. So Rhonda, we have a question that came in earlier. And the question is, what if you transitioned from a sole proprietorship to an S corporation during the time frame? So I'm assuming that between March 22nd, 2019 through the disaster declaration, there was a change in the type of company structure. Would that still be an eligible business?
It would depend on whether or not the actual owners changed. If it was just a structural change, that probably would be considered to be acceptable. If there were changes in the percentages of ownership, then that might present an issue. But if it's a case of just changing structure, but maintaining the exact same ownership and having a history of having that ownership, then that likely would qualify.
Great, thank you. The next question is, would a woman-owned medical practice, which was subject to COVID-19 elective surgery mandates, looking for capital to fund a building and job expansions, qualify? And this is from our friend Dan at Tennessee Central. And also, Dan, if you've got any more specifics to that, if Rhonda needs it, feel free to follow up by unmuting and or typing in any additional. But from that information, Rhonda, what would be the eligibility there?
If it's just an expansion, it may better qualify for one of our other loan programs. And it sounds like a good project, but this is primarily for projects that are helping a business to recover or adapt to COVID-19 pandemic, the COVID situation that their business operates in now, not necessarily just because you were impacted by COVID, because everyone was. So I think in this instance, I probably would need to learn more specific information about the particular business, their situation, and what it is they're looking to do and why.
Great, thank you. We have another question that asks, what is the percentage range for the loan?
I'm not sure that I understand the question. Could we,
Yes.
Joel, would he mind clarifying?
Interest rate, is that the question, Joel?
Oh, okay.
Okay.
So the minimum interest rate will be, the interest rate will be set at closing, and the interest rate as of now would be the lower of 4% or 75% of the Wall Street Journal prime rate.
But as a reminder for those who joined.
I'm sorry?
Oh, sorry. As a reminder to those that joined late, though, interest does not begin until the 24th month. I mean, the 25th month. Hello. Oh,
Yes.
sorry.
Okay.
Okay. You were saying, Rhonda?
And that interest rate will be set into the documents, so people can plan. They won't have they will have the ability to know what their interest rate will be after the 24-month period.
That looks to be like all of the questions in our chat. Also, we have a feature next to the chat button. You can raise your hand if you feel like you've got a question that might be a little bit too complicated to put in writing. We'll be glad to take and call on you if you raise your hand. But we do have another question that just popped up, and this is from Pollyanne's Tea Cakes. My business became revenue generating in late 2019 and was awarded 2 airport contracts scheduled to begin April 2020. Might we qualify for this loan program to prepare ourselves in a COVID environment to fulfill those as well as other contracts yet to be secured?
This sounds like it may also be a candidate for one of our other loan programs because of when the business was began operating. But I'd be happy to talk with her, assuming Pollyanna is a her, speak with her more about her business and her contracts.
Great.
Sounds like a great opportunity.
And yes, please remember that we have several loan products. If this one may not be an exact fit for your situation, please don't let that deter you from contacting Rhonda, and we can get you hopefully connected to the right program. Any other questions? We still have a little over 15 minutes left, and certainly want to be able to use this time to provide you with as much information as we can. I mentioned at the beginning that we are kicking off the program today, and the information to pre-qualify is going to be available, if it's not already, on our website to start that process. We do have another question from Joel, and that is, what professional fees qualify for the loan?
So professional fees related to things like the closing of the loan, as I mentioned, items like a title search, the cost of an appraisal, the cost of an environmental report if those are required. Those would be acceptable. We are not allowed to finance the cost of consultants helping people with their loan applications. It related specifically to the project. And so usually what we see in the way of professional fees are things like the cost of the appraisal and certain closing fees, like things like title searches, for example. I don't have an exhaustive list that I can in front of me that I can read off at the moment. But if he has a question about a specific fee, he can email me about that.
Yeah, he just put that mostly related to closing on a new building purchase.
Okay, so most likely that may be included. Those professional fees would be related to the project and not just additional expenses that someone might have, but it would be related to their COVID recovery plan project. So if you're purchasing a building or renovating a building as part of your plan to adjust your business operations in a post-COVID world, then most of those fees may be included. And like I said, very often just need to see them specifically, but yes.
Great. Still looking. Don't hesitate to ask questions either through the chat feature or by raising your hand. We still have some time left. Of course, Rhonda's, yes.
I did have an email question yesterday after the notice about the webinar went out for someone who wasn't able to attend. And
Perfect.
they were asking about whether or not sole proprietors were eligible, and the answer to that is yes. So it's
Great.
not necessary to have if you can show that you've been operating and filing taxes as a business, then that is acceptable.
Great. Thank you, Rhonda. Well, we'll hang on for a few more minutes, or we can hang on until 11 if to make sure we're available if you have any other questions. But that concludes our presentation for the day, and we thank you for the time that you took this morning to join us and hear about the program. And we really hope that to see you as an applicant for the new funding and being able to help with your business. And so if you are still thinking of some questions and want to hang on, we'll stay on till 11 a.m. And if you think of something later, though, please don't hesitate to contact Rhonda. Again, her email is rsmith@gnrc.org.
Angie, we
Okay,
do
will
have
the
a question. Yeah.
Yes, will the presentation be available to review for those who were late on the call? Absolutely. We will make sure to send out the slideshow to everyone that participated today. We do have the list of everyone that registered, and we'll provide you with a copy of the slideshow. We have another question that just came in. If you filled out the pre-qualification form, how long will it take for someone to contact you?
It shouldn't take terribly long, within the next day or so. We will, once you filled out that form, we will provide you with the application packet. And if you have any other questions prior to filling that out or while you're filling that out, please feel free to email me, and if you want to discuss it further.
And another question, Rhonda, can you talk more about the interest rates of the loans and the repayment timeframe?
Sure. So the interest rate will be set at the time of closing. Right now we have the minimum interest rate that is the lesser, set as the lesser of 75% of the Wall Street Journal prime rate, which is published and readily available, or 4%, whichever is lower, and we'll be charging the minimum rate. During the time frame of doing these loans, currently, based on projections, that's really not going to change significantly. As far as the repayment time frame, it'll be it's monthly repayment over the life of the loan. As we said, the first 2 years will be the payments will be principal only. After beginning with month 25, it will be principal and interest. The term of the loan will be dependent on the type of project. So if it's a piece of equipment, the maximum would be 10 years, but it would be dependent on the useful life of the piece of equipment and that collateral. And so it may be shorter. It would just need to be, we'd need to know what the equipment was in that example. Does that help answer your question?
Rhonda, what would it be for working capital?
Once again, it would be dependent on, it would be a shorter time frame, and it would be dependent on how they plan to use it. And so what we'll do is we'll evaluate the project and business plan, and then communicate with the small business applicant as far as how that could be structured. And what type of collateral will be required, and that type of thing. Oftentimes when you see working capital, it's blended with, it's part of it's not necessarily, it depends if it was standalone or if it's in addition to one of the other eligible uses, such as some type of commercial real estate. That would, and what percentage the working capital is compared to the other piece of collateral, or that's being financed. So I know that's not very specific, but it's a little bit difficult to give an exact term.
So we have another question. Can equipment purchase be used as collateral?
Potentially. I guess it depends. Is it equipment that's being purchased as part of a COVID recovery plan, or is this equipment that you just already own?
What would be the difference, Rhonda? Previously owned would be eligible for collateral, but what you purchase with the money, would that be eligible?
I guess the equipment may be eligible as collateral. Equipment that you've already financed or own wouldn't necessarily be eligible as a project under this loan program, because you've already purchased it.
Yeah,
So and we aren't using the proceeds to refinance existing debt, for instance.
The clarification is expansion or replacement equipment.
That would most likely be eligible. And once again, these are designed to be primarily to help businesses recover, or if they need to change operations in a post-pandemic world. That's the primary reason for this program. And we do have 3 other loan programs that can also help with businesses that are just looking to expand as well.
Thanks, Rhonda. We have about 3 more minutes left. For anyone that's joined late, we will make sure and provide everyone with a copy of the slideshow and the recording so that you can review at your leisure. And please, this isn't the end of being able to ask questions, because feel free to contact Rhonda. I want to thank everyone for joining us today. Looking forward to hearing more from you. And I hope that you have a good rest of the day and a great holiday season. And we look forward to getting some applications. Again, please don't hesitate to contact Rhonda for additional questions, and look for some of the program documents on our website, www.gnrc.org/recovery loans. Thanks so much, and have a great rest of the day.